All right, welcome back to another video. Today I'm going to be kind of going over why demand zones could be very crucial, and especially the demand zones that are a higher low that led to a higher high within the market. When we see market structure, but it's not combined with the session volatility, with the inducements, with the lower time frame confirmations, alone it won't be enough, especially once you start going a little bit into the intricacies and maybe kind of focusing more on being able to, for example, sell in a bullish market. I mean, just listening to this might sound crazy, but if you're basically understanding where you are in the market and noticing that you are an intraday trader, you're basically selling with the session volatility, you could be selling to a demand zone, especially, or you could be kind of buying from a demand zone to a higher high. And this basically cancels two things. The first thing is you understanding that a higher high could never be a supply zone, and you understanding that not any demand zone is a demand zone that you need to sell to or buy from. So these two things basically could mess up your data if you're not consistent. Again, being consistent with trading doesn't mean you're winning a lot of money. It means you're doing the same thing regardless of your outcome. That being you making profit or you taking losses, as long as you're following the plan. When you go back to your data, you're going to see that it all aligns together. So let's say you're going down from a higher time frame all the way to a lower time frame, and you've marked out, for example, let's say this was on the 15-minute, and you're just seeing that you have a demand zone here somewhere. Over here, what I could see clearly from the charts, I could see that I have a higher high, and I could see that at this higher high, I see a complete liquidity cycle, seeing build-up, inducement, and then this one over here gives me a little bit of kind of sketchy question marks because there was no break over here. But I see build-up, I see the inducement of that build-up, I see a push lower, I see a mitigation, and then I see a follow-through to the downside. I see bearish intent. Am I going to sell when when price comes back up here? Probably not, because this is a higher high, and if the market moves like this in a bullish market, I mean, if at every higher high we see that we want to sell simply because we notice that we're here or we're here without knowing where we actually are, without zooming out, you're going to be always trying to sell when price comes here, which is why it's going to invite you in and then it's going to take you out. So understanding where you are in the market is very, very crucial, but without knowing where you are, you really can't find. This is what I always say. Without the right roadmap, you're not going to be able to get to the right destination. So now I'm trying to see the manipulations. I'm seeing that Asia is sending us lower. I see session low over here. I see 1 tap, 2 tap, 3 tap. I see an inducement of this one over here happening in Asia. If I basically just get my markers and I see if this session low is taken out in Asia, I see it's very clear, but I also know that inducements within the Asia session, especially at an Asia low, these ones tend to be traps more so than not. So what I do know is that I have a huge liquidity pool basically telling price that we need to go lower. So Frankfurt is basically done. The open of Frankfurt most of the time is a trap. So I know that if I'm reading price and if I want to go down to the 1 minute time frame, I'll narrow down the time frame and I'll basically try to understand how much can I refine my zone so my targets make a lot more sense. When that is the case, let's just wait for this to load. When that is the case, I'm looking for that last imbalance over here to see rejection, and maybe I want to go all the way here, maybe I want to go all the way here. It's just really, you wouldn't want to miss a trade if the whole thing could be 7 pips, anywhere between 5 to 9 pips, basically good, even 10, 11, that's not bad. We can have it, let's say, somewhere here just to make sure we cover a little bit of half of the imbalance at least. So now we know what we're targeting, but we're still very far from this, which is why on a London session, you might be able to see that you're selling, and on a New York session, which is known for reversals, you might be able to be buying. Where will you be buying to? You could buy all the way up to a higher high, which could lead to today's session, tomorrow's London session, another retracement, and then another retracement, and then another push to the upside. So by just reading what price is telling us, I know that there's liquidity under the Asia low and above the Asia high. But I know that if I want to shoot higher, I want to gather more liquidity. So probably I would tell people that, not people, like I would tell the retail traders that, you know what, I'll take more liquidity from here and I'll start showing my cards as if I'm ready to go to the upside. But realistically, what is happening right now is we see price maybe having a build-up, a sweep, a push lower, a mitigation of that sweep, and then another push lower. Now I can't trust that because the Asia low and Asia high are both manipulations that are happening in the market. So I know that there's a huge liquidity pool residing over here. So now I'm following the inducements. What is going on when the session opens? I'm looking at a huge sweep of that buildup over here. So I see there's buildup, maybe trend line, maybe a trend line over here, and then a run of liquidity, and then a push to the downside, but not enough to break that low. So I'm seeing more mitigation and then buyer control to the upside. I'm wondering if I want to buy or sell, but then when Frankfurt opens, I know that if there's something that is going to show as manipulation, it's going to be that Frankfurt open. Most of the time when Frankfurt is playing its cards, it's going to give you a reaction and then move otherwise, but obviously not 100%, but more times than not. So I'm looking for these manipulations. I'm seeing that this basically run of liquidity that happened for this trendline buildup got taken out because I had a high and that high got taken out in Frankfurt. I'm seeing if that high is going to be respected or not. As long as this didn't take out an Asia high or an Asia low, you can trade off the back of this inducement if it shows valid entry criteria. Meaning, if I see a sweep respecting, if I see my two leg, if I see session volatility kicking in, if I see manipulation, and if I know exactly where I'm going. So I'll have the session kind of play out for a little bit, and then we're basically looking for that mitigation over here, that takeout of this, but respecting a range anywhere that, we want to wait for the session. We want to be reactive instead of being predictive, because if we're reactive, then we're able to kind of, we're waiting for the market to do this, and then we'll do that instead of kind of having this clear bias and just being married to that bias. So we'll have the market play out a little bit, and you see the market starts with sweeping that Frankfurt low, but we know that there's a big liquidity pool just residing under. So once that sweep happens, we're seeing if that sweep over here, so this sweep, I'll make it clear. Let's say this one over here sends price higher. Will it break that structure? Because if it does break that structure, it won't tell me that I'm going to be buying, but it will tell me that my sells are being invalidated. If that doesn't happen, then great. I'm looking for the sweep of this one, a respect of this one, and I know that sellers now have the control. That means we've had buildup, a push to the downside, a sweep. I'm looking now for a one leg, a two leg, a retracement, at least a 50%, and then I'm sending price lower. What am I targeting? Well, I'm targeting this low over here because I know that this is a trap. I'm targeting this low over here. I'm targeting this low over here, and then I can zoom out and see, I might have a lot of space. But we want to target our 1 to 3. We want to see that everything that we're looking at makes sense. So I'm seeing that first leg starting to form. Okay. And then, okay, great. Obviously, this still looks like it's too much, but we're looking, okay, so great. We now have two legs that just formed. What I'm waiting for right now is a fill of that imbalance. So you see that imbalance over here. We're waiting for a fill of that. So we see one leg and then another leg respecting that previous high, breaking lower. Obviously, these would only work on entry criteria. It's not anywhere you can follow the wicks, but here entering, that price is pushing lower to a new territory. That sellers are having the control and the intent. Remember that this is now becoming a trap because this didn't send it over to the high that created the low. So, this is a lot of information over here. I'm looking to enter at anywhere above that 50%. So anywhere above here, I'm okay to enter right now. My stop loss could really be somewhere over here. So I could draft it right now and I could have my entry, maybe close that imbalance over here. I could have my stop loss over here. I could see any wick that could enter, and then I could target the low. So we'd have something like this, and then we would target the low over here, which is be the Asia low. We could target that pool of liquidity, which is residing under. Well, I just drew that box, but normally I would just target this one over here. This would be a 296, so exactly like a 1 to 3 for me. And then I can, for example, let price play. We'll see. Normally we could probably enter even a bit higher because it could wick into it, but we'll have price play out. It taps us in and this is in again. You see, normally when things like this happen, you might be a little bit scared, but at that break of structure, we can move to break even, or you could just trust your trade and your gut and just move with it. And now we're just seeing price creating lower highs and lower lows. We're not worried as long as we don't see any inducements. Exactly. And you see slight rejection on the Asia, maybe inviting buyers a little bit, but you see that sellers just took complete control. And then you can zoom out and you can realize that price could go all the way lower to a demand zone, but this might take a little bit of time. In both cases, as long as I have my 1 to 3, I'm out. I don't care much about it. And that's probably it. I can push through with price over here a little bit and I can see if it leads to that zone or if it doesn't. I don't remember, but After I get my 1 to 3, normally what I'm looking for is that gap between the London and the New York session. And when that happens, I'm just waiting, because I'm now waiting to see the New York session cards. And if it does show me that there is a reversal, we can see that price went all the way down to create that low over here. If I mark this down to the imbalance, maybe it tapped it perfectly. Sometimes it does. So I'll see this. If we have a tap, okay, great. So this is just perfect precision over here. We're just not worried about anything. If I see reversals from here on out, I'm going to be looking for a reversal trade, which is a buy position on the New York session. Again, this would be a 1.6 to 6.4. That's a 6.6% return on whatever portfolio you have. If you have a 200K funded account, just looking at the numbers over here, if you have a 200K funded account, $200,000, and you just made 6% of that $200,000, you just made $12,000. $12,000 in one trade, and you paid literally $1,000 for the account. So you're up $11,000 as a return on your investment. So let's say we have plus $11,000 ROI, and that just happened in one trade. It's not like, I'm not even going to say one day. I can just be honest with you, and I could say that this was 4 hours. You just made $11,000 in 4 hours. You know exactly where you are on the charts. You know that you won't be selling anymore because this is a bullish market. And if you guys do like this video and you want me to continue with that series, I can continue with the New York reversal tomorrow, or we can continue trading to the higher high. If this is stuff that you guys feel like it's valuable, well, then just let me know in the comments. And please, if you do like this stuff, like and subscribe. And if not, go save the world. That being said, enjoy.